Welcome to Compliance School, brought to you by KYC-Chain. Today, we're going to talk about money laundering. So what does this mean for your business? If you're doing an STO, if you are a fintech company, how do you get the proper compliance to comply with these KYC ML laws that are kind of hitting everyone in the sector? In the end, we'll provide you with a free checklist for a risk assessment for your business.
So I'm going to kind of give a really brief overview of what money laundering actually is, because it's a term that I'm sure many of us have heard and many of us know of, but we maybe don't actually know the exact definition of. Money laundering is a very, very broad term that falls under the kind of compliance umbrella. And the way you would define money laundering in the very broad sense is that it's illegally obtained money that is reintroduced into the financial system. So this really goes from the really low scale to the really high scale. So the really low scale might be a drug dealer who earning his money through illegal activities. That drug dealer then goes and buys himself some new shoes. He's actually committed a very small act of money laundering where he has used the money that he's illegally obtained and he has reintroduced it into the financial system by buying a pair of shoes. So this is a really kind of low scale kind of version of money laundering. In movies and in popular culture, you might know this as dirty money. So here we're talking about extortion, insider trading, drug trafficking, illegal gambling, those kind of things where relatively mainstream people will know about these forms of money laundering. What's important for you as a business owner is that you understand how big the problem is. It really affects businesses of all sizes. So even if you're running a very small business, or even if you're just looking into kind of using your first compliance tool, you need to be aware of the huge threat that money laundering actually is to you and your business. Just to give you an idea of the scale of the problem, it's estimated that 2 to 5% of global GDP, $2 trillion, is generated through money laundering. So it's actually illegally obtained money that is reintroduced into the financial system. So we kind of had the example already of the drug dealer. Then you have the kind of much larger scale where you have very large illegal activities that are generating illegal money and are trying to reintroduce it. And in those cases, you really typically have 3 steps. So you have the placement. So you introduce it somehow into the financial system. Then you layer it, you move it around to create confusion by wiring or transferring through numerous accounts. And then you have the integration, which is kind of you keep moving the dirty money until it appears clean. So I hope that kind of gives you a high level understanding of what money laundering actually is.
A history perspective here. The first wave came around the 1930s. So if you see on the image here, we have an image from Prohibition, which is basically when selling alcohol was illegal in the United States. And what happened was Al Capone, this guy here on the right, he was prosecuted for tax evasion. And what happened was that when you sold illegal sales of alcohol, you weren't paying any taxes. And basically he had all this money that he needed to get back in the system. And so eventually he got busted for tax evasion. But then what happened was once gangsters started paying legitimate taxes, you couldn't confiscate all the illegal money. So that's kind of the first wave of how this kind of KYC AML laws came to play. It was that you had these gangsters that were selling illegal alcohol, but then, well, how do you actually take it away from them, even if they're paying taxes? And so that's why these laws kind of came into fruition.
Quite a few years later, you kind of have the widely recognized second wave of money laundering, and that's typically the war on drugs. So 1970s, 1980s, 1990s, you have subsequent American presidents kind of cracking down on illegal drug use and illegal drug trade that's entering into the United States. And this was considered a huge problem, not just in terms of kind of the civic well-being, but also just in terms of money laundering, how much money was actually illegally acquired through the trade. How do you seize money for drug crimes? Because normally, people are innocent until they're proven guilty. And you really need to have a very strong kind of paper trail, and you need to have very strong laws in order to be able to prove that somebody actually made their money in an illegal way, especially when you live in a kind of cash-rich society, which in the 1970s, 80s, and 90s, American citizens definitely did. As a result, we did have the introduction of numerous kind of money laundering laws, which made it significantly easier to confiscate the income of individuals and to prove the source of funds.
Now what happens is instead of being innocent until proven guilty, the law enforcement can confiscate your money and you have to prove your source of funds is actually legitimate. So basically they did a 180 on the whole law through kind of like a legal jiu-jitsu, you can say.
Kind of subsequently to that, we have the September 11 attacks caused the Patriot Act. And the Patriot Act was a huge bit of legislation which looked at terrorist financing. Compliance as a term is really an umbrella term which has in it anti-money laundering and terrorist financing or anti-terrorist financing. Those are kind of the two very big branches of compliance, especially as it affects you as a business. You need to make sure that not only does your business not help to launder money, but it also you have to make sure that you're not enabling terrorism. And this is, again, something that might sound quite outlandish. You might think to yourself, hey, I'm just running a small business and maybe a little crypto exchange, maybe an STO, an ICO. These are things that you're not thinking about necessarily, but you really need to, because these are huge problems that affect everybody. As a business, you need to really be cautious. For example, if you do business with every country in the world. That might not be a smart move. You might want to exclude, the obvious one would be North Korea, but then you have other countries as well, which just from a risk point of view, typically score much higher than a country like Luxembourg, for example, or Estonia.
And to add to that, I think one thing this third wave brought about was the surveillance and monitoring of transactions. So if you think about like how before in the 80s, we just didn't have this technology like the internet to actually monitor transactions too. So when it comes to your business and actually having to do this task, a lot of the regulation burden is kicked to your business. So how do you have the right tools that help you process the compliance?
Yeah, that's a really good point. And if you look in the description of this video or you go to KYC-Chain.com, we will provide a link to you where you can actually download a template risk framework, which will allow you to very accurately and reliably score the risk that you have within your business, not just in terms of who you do business with, but even within your own team. So your own team, if you do have a team, you have a small group of people you're working with, they actually also represent a money laundering and terrorist financing risk from that perspective. So do make sure you download that. Do make sure you check that out and give us some feedback. We spent quite a bit of time on it, and we think it'll be really helpful to you.
Yeah, and just some basic implications on crypto and the crypto market. If you're taking money randomly from different addresses and you're doing an STO, you need to do KYC too, because you need to know where the source of funds is coming from and also who is actually behind this. And also, can they prove who they say they are too? Essentially the high level thing you have to do with compliance. Even with some stable coins now that are USD pegged, they do have compliance at the withdrawal point, where when you're converting, say, an Ethereum token to USD, you do have to prove who you are, and some points, even your trading history and where that came from too.
That's a really good point. And if you're kind of new to the crypto space, make sure to check out a company called Chainalysis. Chainalysis is a blockchain analytics platform which allows you to track the source of funds. So you can actually identify wallets, for example, that are marked as fraudulent or dangerous or high risk. So we're not affiliated with them in any way, but if you are launching some sort of project, an STO, an ICO, they're definitely a company that you might want to check out.
So like Chris said, we'll have a free risk framework checklist for you to download below here for any business, just to give you some checkpoints on how do you actually get started with building a compliance strategy, and how do you make sure that you won't get hit by a regulator, by fines. HSBC got fined 1.9 billion in 2002, BNP Paribas 8.9 billion in 2014. You hear this on and on and on. And so it's not just something that big banks have as a risk. It also has little small fintech companies or even crypto companies are at risk for this too, because you're a player in this financial game.
And AML and compliance can be a topic that has no immediate benefit in that regard, and therefore it's very easy to put it on the back burner. These are topics that are becoming increasingly important. If we look at the ICO and the STO world, we're seeing a huge amount of regulation entering the space, and we're seeing regulators increasingly looking at ICOs and reclassifying them as STOs, for example. So the point here is that AML is becoming increasingly important, and this is something that, although you might not see the short-term benefit of it, in order to survive in the long term, you need to at least understand the concept, and you need to at least understand the risks that you're taking by doing business, especially in the crypto space where operating internationally without any borders whatsoever and without any friction whatsoever.
Thanks so much for tuning in, and then make sure you get your risk framework below. I will have the download link in the description, and we'll see you next time.